Welcome to the LRF Group Market Report, your weekly briefing on the U.S. economy and housing market. I'm your host, bringing you the latest data and analysis for June 2026. Let's get into it. Here are the four numbers driving every real estate decision right now. The Federal Reserve's interest rate stands at 3.75%, held steady for a third consecutive meeting. Inflation is at 3.8% and expected to rise to 4.2% in May as energy prices climb. Unemployment is at 4.3%, and GDP growth came in at 1.6% annualized in Q1 2026, a meaningful recovery from the 0.5% recorded in Q4 2025. The Fed held the funds rate at its 3.5% to 3.75% target range in April, and markets are watching closely. Inflation remains stubborn. Core inflation, which strips out food and energy, is expected to edge up to 2.9% year over year. The Fed's message is clear. Rates are not coming down until inflation is convincingly under control. For buyers and sellers, this means the elevated rate environment is not going away anytime soon. The U.S. economy expanded 1.6% annualized in Q1 2026, a significant bounce back from last quarter's near stall. Consumer spending on services led the way, rising 1.8%, while goods spending remained subdued. On the labor front, total employment rose by 149,000 to 162.77 million workers. However, the labor force participation rate remains low at 61.8%, signaling that many Americans are still on the sidelines of the workforce. The housing market is showing renewed momentum. Existing home sales rose 3.2% in May to an annualized rate of 4.17 million units, beating market expectations of 4.07 million. This extends a rebound from the 7-month low recorded in March. The South led all regions with 1.96 million units sold, while the Midwest jumped 6.4% to 1 million units. Total housing inventory grew 3.4% to 1.47 million units, representing 4.5 months of supply. Mortgage rates remain elevated, but showed a slight pullback this week. The average 30-year fixed mortgage rate eased to 6.48% in the first week of June, down from a 9-month high of 6.53% the prior week. The 15-year fixed rate currently sits at 5.79%. This modest decline aligns with a drop in long-term Treasury yields and offers a small window of opportunity for buyers who have been waiting on the sidelines. Here is the full housing market snapshot for reference. Existing home sales, 4.17 million, up from 4.04 million. Average house price, $508,800, up from $505,200 in April. The 30-year mortgage rate, 6.48%. Housing starts, 1.465 million units. Building permits, 1.423 million, up from 1.363 million, signaling continued builder confidence. And total housing inventory, 1.47 million units, up from 1.39 million. The data tells a story of a market finding its footing. Whether you are buying, selling, or simply keeping a close eye on the market, the LRF Group is here to help you navigate every decision with confidence. Scan the QR code on screen to subscribe to our free weekly market updates, delivered straight to your inbox. This message is brought to you by the LRF Group, licensed in Florida and New York, with offices in Miami and Manhattan. At LRF Group, our services for your world.